Hello everybody. Are you ready to make smarter property investment decisions? I am Kate Hill, qualified property investment advisor, and I am here to help you cut through all the noise with some honest, no hype advice. If you want real strategies, real tips, zero fluff, you are in the right place. Today, let's discuss where all the renters are going and following the demand to find your next property investment. Okay, big topic. Rental demand can be one of the clearest indicators of a strong investment location. If you follow where tenants are heading, especially in a tight market, you can position yourself ahead of the capital growth curve. Renters are often the first wave of demand in an area, and their choices can reveal what's coming next. So let's unpack how you can use tenant behavior to guide smarter property investments. Renters are usually the first to test out up-and-coming suburbs. When affordability and availability in one area dries up, they move outwards or sideways in search of better value. These patterns often predict where future owner-occupiers and eventually price growth will follow. Assuming, of course, that you are in a location with great long-term growth drivers. High rental demand and low supply means higher asking rents and generally lower vacancy risk. For investors, this translates to stronger yields, fewer gaps in income. You want your investment to work for you from day one, and tight rental markets make that much more likely. Most renters are price sensitive, but they also care about access to work, schools, transport, lifestyle perks. Suburbs that offer good value and proximity to key services tend to see rising demand. That's not rocket science. As core areas become too expensive, renters spill out into neighbouring suburbs. This ripple effect pushes demand into fringe and sometimes overlooked pockets, creating new growth corridors. If you can spot the early spillover, you can ride that wave before the price peak. Vacancy rates generally below that 3% mark, at or 3% usually signals strong tenant demand. Below 1% is a rental crisis and a big opportunity for landlords. Look for consistent patterns, not just one-off spikes and drops. If median rents are rising and properties are being snapped up quickly, it is a sign that an area is hot. Days on market is another clue. Shorter leasing times equals more renter competition. Make sure that you always research why these particular rental trends are happening in any given location. What you don't want is that high demand to be from renters. It's a short-term trend because of a short-term reason. It can happen in single industry towns like mining towns, where the demand for rental properties can just as easily and quickly stop and drop as it arose. While the specifics change month to month, suburbs with large infrastructure projects, regional and city job growth, migration appeal, they are topping the list. Think areas just beyond the major capitals or some key regional hubs. Many locations like Toowoomba, Moreton Bay in Queensland, Outer Metro Adelaide, parts of the Central Coast in New South Wales, many more areas have seen huge shifts in rental activity. They offer lifestyle appeal, affordability, job access, the golden trio for renters. Understanding tenant behaviour gives you a serious advantage. Letting the data, not assumptions, guide your next move is how smart investors stay ahead. When you follow the renters, you often find the next best place to buy before everybody else does. As always, everybody, thank you for watching. Please do subscribe, I really appreciate it, and I will chat to you all soon. Bye for now.